Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Stephen Mathai-Davis, co-founder, CEO, and CIO of Q.ai Invest, to discuss how leveraging AI-powered investing can give millennials equal access to the market. Stephen, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me on today.
You got it. And give us some insights into the product development process, including tailoring the interface to fit expectations of millennials. What are they looking for that's different than other generations of investors?
Yeah, let me tell you a little bit of what we've done since we joined the Forbes family. Before we even started building anything, we actually went and interviewed several thousand real millennial investors who we met on Facebook, Instagram, and Reddit. We went into these investment communities and want to learn more about the problems that we're facing. And surprise, surprise, many of the issues that were raised were, how do I cut my losses? When do I know when to take my profits? How do I actually build a diversified portfolio of stocks and ETFs? And how do I dynamically manage my money in this changing environment that's becoming more and more volatile? And using that as I would say, kind of as a roadmap, we began to build a product around addressing those issues very specifically.
And how does this type of structure make money? It's not like you're pulling in advisory fees or asset management fees. How does the structure work?
Well, we're a little bit different, right? So we're calling ourselves a robo hedge fund. We're actually the first AI-powered robo hedge fund for the retail investor. And what we're bringing is digital investing strategies to the average user. And what we've done is taken a different route. Now, there's been some great innovation in the digital financial advisor space. There's been some wonderful innovation in free trading. But again, many of them still use the old Wall Street models of either selling trade flow or charging fees. We've taken a completely different approach because, again, we're targeting the millennial investor who's used to microtransactions and micro subscriptions. And we built everything around what we call the Netflixification of investing, where more or less you subscribe to an investing strategy and it does everything else for you in your brokerage account. And we believe that's where the marketplace is going.
And that was my next question. Why is it critical to give groups like millennials equal access to the market? What do you think the longer term impact is going to be?
Well, look, everybody knows there's going to be a massive wealth transfer to the millennials over the next decade or so. And if I'm an older millennial, and if you look at a lot of the innovation that's happened, it's been free trading apps and the digital financial advisor model. If you have that much money to invest, you're not going to either one of those. And then you're stuck with what is, in my opinion, it's still a very old Byzantine industry, which is the mutual fund industry. How do I buy into investment strategies? Where do I go? How do I actually do that? And our focus really has been directly going at the investment management space and saying, how do we take an old industry that I've spent my entire career working in and make it more modern and fit the new generation of investors? And we felt inexplicably that it needed to be digital and it needed to be intuitive and easy for somebody. Imagine trying to buy a mutual fund right now on your brokerage account. Where do I start? It's pretty limited as well. It's a totally concentrated industry. 3 firms control about 75, 80% of the $21 trillion mutual fund industry. I mean, just think about that for a moment. There's no product differentiation. We have that much control in 3 to 4 firms. And you can apply the same thing with the $5 trillion ETF industry that's controlled by 4 to 5 firms that's growing exponentially, right? Roughly 19, 20% a year.
Stephen, the question is it prudent to completely remove humans from the process? As you mentioned before, we're looking at a multi-trillion generational transfer of wealth that will take place over the next decade or so. Will AI alone solely help millennials manage those kinds of strategies?
Well, we're pure AI, right? So it's AI in our case. We have a value strategy. We have a global macro strategy. We have a tech strategy. We're coming out with a smart beta strategy and a trade the S&P 500 strategy. In all cases, it's pure AI. There's no human intervention. But I would challenge that by saying it's always a human who's building the algorithm. So there's always this qualitative control. Like, for example, with our strategies, we've made the decision to focus on risk-adjusted returns, meaning we're looking at Sharps, we're looking at Sortinos, we're looking at VAR, things like that. So we made the decision, the qualitative decision, to say the algorithms need to be built around that. So first, personally, I view AI investing as more probabilistic investing. I used to be a part of a team of 10 analysts where we were trading US large cap and global markets. Be a whole lot easier if the team is a little bit smaller, but you get better outputs with better probabilities. And that's how I view AI personally.
It's interesting. Takes the emotion out of trading as well, as you alluded to. Stephen, it was great to have you with us. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much for having me on, Jill.